Traders? FX Pip Collector here. Today is Friday, January 17th, and we're going to be taking a look at the US dollar pairs, including gold, and we're also going to take a look at a couple of the JPY pairs. If you haven't done so already, definitely check out my free Discord community. It is 100% free to join. Never had to pay a dime if you do not want to. If you would like to join my membership, then you do that by checking out my website, and it is only $30 a month, and it gets you access to all the benefits listed down here below. So anyways, one of the first things I always like to do is definitely check out the news calendar. Not a whole lot on the news calendar for today. The only thing really left for today is building permits in the US, which I don't really think that's going to have really any effect on the Forex market. Now, this is an important next few days. Now, even though it's not on the news calendar, which I'm kind of surprised it's not on the news calendar, but Monday is a bank holiday. So the stock market is going to be closed on Monday. And normally, when the stock market is closed, the New York session is very, very, very slow. But Monday is the day that Trump takes office in the US. And Sunday, there's going to be a whole lot of things going on when the market's closed. And then Monday is when he's taking office, which is when the markets are actually closed too. At least the stock markets will be closed. Forex will not be closed. But it's going to be an interesting few days because Trump is really going to stir up the market, in my opinion. So be very, very cautious. Normally, I have no problems holding trades over the weekend, but this weekend it may be a little bit crazy to hold on to your trades. I don't know. We'll have to see. I think that I probably will end up holding on to some of my trades, but we have to be aware that there could be some pretty significant gaps come Monday because of Trump taking office. So definitely be aware of that. You know, if you're not an American, maybe you didn't know that Monday was the day that Trump takes office. But anyways, I like to start off on the U.S. dollar index. I still believe that this is three waves of A. I still believe that this is three waves of B. And I'm still looking at this as five waves of C. So that makes this 3-3-5. A 3-3-5 pattern is a very recognizable pattern in the Elliot wave world, which is normally a flat. Now we are bouncing up under 78%, but if we actually get rid of this and zoom in a little bit, do we actually have a break of structure to the downside? Definitely not. So just because it's bouncing from a Fibonacci level does not mean that it's gonna, be a trend reversal. It could possibly make a higher low and continue the uptrend really at any time. So we'll have to see what happens, especially over the next couple of days with Trump taking office. It's going to be a pretty significant next few days. I would expect to see a lot of volatility in the markets. So, anyways, moving on to the euro dollar. I mean, this higher time frame story never really changes that much from day to day. The trend is definitely down on the euro dollar. The last structure level is right here. If price breaks that, then I'll definitely become a buyer overall. If not, then we need to pay very close attention to our fib levels for three waves up, 1, 2, 3 waves up, and another entry to go short. The trend is definitely down, and there's definitely no evidence of the trend being over yet. Now, going down to the 1 hour time frame, I have been kind of expecting to see a move to the upside. To me, this really looks like an uptrend right here, like either a wave A or a wave 1. I still think this move down looks like either a wave B or a wave 2. Now, likely we're in a wave B right now, and I would kind of expect this wave B to maybe go down to the 50 to 61%. Now, trying to figure out exactly how a corrective wave B is going to play out is not going to be really doable. I would expect that it would go down before it goes back up, but I mean, it really could just go up from here. But either way, when it finally does start the next move up, I would either assume that it's a wave C, and if it is a wave C, they would make a lower high, continue the downtrend. If it's a wave 3, which it definitely could be, then it could go up and break this structure, which would confirm a bigger turn on the longer time frames. So we're just gonna have to wait and see whether it's a wave C or whether it's a wave 3. So anyways, let's keep going. Let's move on to the pound dollar. Pound dollar, same type of thing, except for the pound dollar actually did kind of make a three-way pullback already. The pound dollar looks quite a bit different though because of the pound weakness we've had over the last couple of weeks because of some negative pound news. But it's the same type of thing for me. I mean, to me, it looks like most likely an A, maybe a 1. Because of the shape that we have right here, I'm definitely leaning towards wave A. This is definitely kind of looking like three waves down to a Fibonacci level. I think there's a pretty good chance that this is going to continue up. And I think it's probably going to be a wave C. I think it's more likely an A, a B, and a C, but it definitely could be a 1, 2, and 3. Just like the euro dollar, if it's a wave C, then they will make a lower high compared to this over here, lower high, and continue down. If it's a wave 3, then it will just keep on going up and it will eventually break this structure up here from the daily time frame, showing us that we really do have a trend reversal. If you go up to the daily time frame, just like the euro dollar, this is definitely in a downtrend, and it would take a pretty big move to the upside just to show us that this downtrend is over. So moving on to the Aussie dollar, pretty much same story. The structure is right here. If we break this structure, then that should confirm that this whole downtrend is over, which I do think is a corrective wave X of a WXY. If it doesn't, it could, which it definitely doesn't have to, it could easily make three ways up to a fib level, make a lower high, continue the downtrend. The trend is your friend, that's for sure. Going down to the 1 hour time frame. On the 1 hour time frame, we got a Fibonacci retracement on this move up right here. Just like the other pairs, I would expect it to be an A or 1. I would expect this move down to be a wave B or a wave 2. Kind of looks to me like it needs to go down and sweep these lows, maybe hit the 61. Maybe the 50 or the 61 could be an area to look out for also. But normally it likes to do a little liquidity grab before it does start to move up. I would expect the move up to likely be a wave C, which means it would make a lower high compared to structure over here and then continue down. But if it does turn out to be a wave 3, then you'll see higher highs, higher lows, and eventually you'll see it go up and break structure, which would confirm a bigger turn on the much higher time frames. So let's keep going. I don't analyze the Kiwi dollar because it's literally exactly the same as the Aussie dollar. I do trade the Kiwi dollar, but I don't necessarily really put much time into analyzing it. US dollar CAD is definitely a very sideways market, that's for sure. I actually think that this little peak right here is probably the wave 5. So just like the other pairs, I think this is an A or maybe a 1. This is probably a B or maybe a 2, and eventually it's going to go down and make a C or maybe a 3. If it goes down and starts breaking some significant structure, then we definitely would switch it up and start looking for shorts overall. But we have to keep in mind anything we see to the downside until we get a structure break is likely just to be another correction to the uptrend. Going down to the 1 hour time frame. Now we do have a Fibonacci retracement on this last move down right here, from here to here, to look for areas of resistance. The 78% is really the last stop because normally if price goes above the 78% of any given move to the downside, then that usually tells you that the trend has reversed. So if it does turn here and if it does go down and break structure on the 1 hour time frame, that probably tells us that that is a correction to this move down and that it probably is going to go down and make that wave C. Now, according to the other dollar pairs, I was kind of thinking this was the A and this was the B, and it was going to maybe go up, take out these highs, and then that would be an A, B, C, or B, and this down here would be the wave A, and then it would potentially go down for the bigger wave C, like I was showing on the daily time frame. So keep an eye on it. If it doesn't break structure to 78%, then the wave C is not over, and it's probably just going to keep on going up. Moving on to the US dollar Swiss. I've been short the dollar Swiss pretty much all week here. It's not a horrible trade. Not really doing a whole lot. The market is pretty slow right now. And the reason why I think it's slow is because the market's really waiting to see what Donald Trump is going to do in his first probably couple days of being in office. Apparently he's got like a lot of a lot of plans, that's for sure. So anyways, I believe we're in a wave A or wave 1. Normally, a wave A or wave 1 will take out the structure of the take out the highs or the structure of the previous downtrend, which is right here. So I'm still expecting to see some more movement to the upside. I still do not think that this wave A or wave 1 is over. And by the way, how would you trade a wave A on shorter time frames? You'd look for longs on shorter time frames. How would you trade it if it was a wave 1? You would look for longs on shorter time frames. So is it important to know whether it's a wave A or wave 1? Definitely not, in my opinion. Moving down to the 1 hour time frame is where we got our Fibonacci retracement. We got our Fibonacci retracement on this last move up, which this move up is definitely a trend. This move down to me definitely looks like a trend also, which is why I definitely am assuming it's a wave A. Maybe a wave 1 if we're lucky, but more likely a wave A. This is probably going to be like an A, B, C, or B, and then it's probably going to go down for a C. If it is a wave C, then it will either make a higher low or maybe like an equal low and then continue back up. If it's a wave 3, then it will break through this structure with momentum, probably pull back and then continue the downtrend, making lower lows, lower highs. So pretty much similar to all the other dollar pairs. We're looking at this as either a 1, a 2, and a 3, or an A, B, C, which it's really traded exactly the same. The only difference is a wave 3 will just keep on going, and a wave C will break structure and continue the uptrend when it's ready. Moving on to gold. Gold did make a little bit of a turn, a little bit of a lower high, but I mean, at this point, it kind of seems likely that it will try to take out these highs. It seems like it probably is a wave B of C. It does kind of seem like it could even be a 1, 2, 3, and maybe we're in like a wave 4, that it breaks the highs in the wave 5, and then it turns down, completing the A, completing the B, and then going down for the C of wave 4. Kind of seems to me like that is the most likely scenario, as we're in a wave 4 of a uptrend right now for the 5 waves of wave C of wave B. Going down to the 1 hour time frame is where we got our Fibonacci retracement on this whole move up. Just like I was showing you, I think this is likely a 1, 2, and probably a wave 3. It's a trend within a trend, meaning that the bigger 1, 2, 3 I showed you on the daily time frame is back here further. So if this really is a wave 4, then a wave 4 is a correction to the wave 3. So I would expect to see a Fibonacci bounce and another impulsive move up. So if you get like a fib bounce and especially a break of structure, then I would definitely consider going long again, probably taking it at least up to these highs right here where the higher time frame structure is. If you don't get a fib bounce, or even if you do get a fib bounce but a no break of structure and you get just lower lows, lower highs, then you can just continue to look for shorts. It definitely has made a turn to the downside. I assume the turn is a wave 4, but I mean, it could just continue to drift down. And the way you would tell the difference is if it bounces from a fib level, breaks structure, then you know it's going back up. If it doesn't do that, then you could just keep on looking for longs, shorts, that is, especially if you really are a short time frame trader. So that's the plan on gold. Moving down to the US dollar yen. I always consider the US dollar yen more of a yen pair than a dollar pair. If you compare it to the yen pairs, it's way more similar than if you compare it to the dollar pairs, which is why I have it grouped with the yen pairs. Now we definitely do have a bigger structure on the daily time frame. I think we might have a trend reversal, and if it really is a trend reversal, then this wave C of wave B is probably over. I think this is the A down here. I think this is the B, and if it really is now going down, then I would expect several, probably at least 2 months of downtrend for a big wave C, probably a big wave C of wave 4 on the much higher time frames. So now that we did get a break of structure to the downside, I'm definitely looking for shorts. But that doesn't mean I'm just going to go short now. Honestly, it probably is going to pull back beyond this structure right here. But so far, we need to just put our Fibonacci retracement from here to here. Because if it does make 3 waves up and a lower high at a fib level, we definitely want to go short. It kind of seems to me like it's probably more likely going to make a correction to this whole move now. Maybe end up looking something like this and then continuing down. But now that we have this break of structure on the daily time frame, I'm definitely looking to get short at the end of a 3-way pullback. Probably more likely a 3-way pullback to this whole 5 waves down over here. So keep an eye on it. Keep an eye on your fibs. It probably is going to go up and take out these highs, make an A, make a B, and make a wave C. At least in my opinion. Now, the euro yen technically has not broken structure to the downside yet. Technically, the trend is still up, but the fact that most of the other yen pairs have broken down makes me think that it probably is going to go down. I personally think that the way B ended over here, I think that this is likely like a 1-2. Now, it kind of almost seems like it should go up again to finish off an ABC of 2 before it goes down, but that may be overthinking a little bit. I mean, I think at this point we should be looking for shorts and assuming that this is now going down in a big wave C on the higher time frames, just like the US dollar again, probably a wave C of wave 4. If we real quickly take it up to like the weekly time frame, you can more clearly see A, B, 1, 2, 3, 4, 5 of C of wave 4. So anyways, let's take it all the way down to the 1 hour time frame. Like I said, technically we do not have a break of structure down yet, but I think that it will break structure. To me, this looks kind of like 3 waves down right here, so it kind of almost seems like this is like some sort of a flat, like this is an ABC, and maybe it's going to do something like that and then continue the downtrend. So keep an eye out for some shorts. Keep an eye out for the break of structure that will help confirm that we really are turning down in a much bigger way. than this move down just being a correction to the last wave up. So keep an eye out for that. If it does start to break to the upside, one thing to do is instantly put your fib on this whole move down and look for a three-way pullback. Look for a Fibonacci bounce to go short again for the continuation of the downtrend. Now, moving on to the pound dollar definitely did break structure to the downside several days ago. And a lot of that is because of the pound. It's not just because of the yen strength, it's also because of the pound weakness that we've been having. I personally think the wave B is over here. I think this is an A. I think this is three waves of B. I think this is five waves down for a one. I think that we're in a wave two, or the wave two is potentially over. Just like the other pairs, you would kind of think that it would go up like this to finish a two and then down, but I personally don't think it's going to do that anymore because this move down is way too impulsive to be a correction to this. I think it's more likely it's going to make lower highs, and we're already going down in that wave C of wave four, just like I showed on the Euro Yen weekly. If you go up to the weekly, you can more clearly see wave A, three waves of wave B, one, two, three, four, five of C, A, B, C of four on the weekly time frame. So taking it all the way down to the 1 hour time frame, I personally would recommend looking for shorts. I would actually want to see this break structure on the 1 hour time frame before I would even think about going short, because that would tell me that this trend is over. Then I would put my Fibonacci retracement from here to here, and I would observe the market and hopefully see a ABC three-way pullback to go short for the continuation of the downtrend. So unless it goes all the way up here and starts breaking structure to the upside, I would assume that any move you see to the upside is likely just a correction to the last wave down. So look for three-way pullbacks, look for Fibonacci bounces, look to go short at the end of three-way pullbacks, hopefully for the continuation of a big wave C of wave four on like the weekly time frame. So as far as all these other pairs are concerned, I do analyze every single thing on this list right here, every single day for my members. Every single Tuesday, Wednesday, Thursday, and Friday, I do a 190-minute to 2 hour live stream where we look for entries and we analyze these markets together. And I do share every single swing trade that I take with my members and day trades, really any trade I take at all, I share with my members at the exact time of entry with stop losses and everything. So if you want to check that out, the link is fxpipcollector.com. It's in the description. It's also scrolling down here below. Or if you just want to join my free Discord channel, it is 100% free to join. And the link for that is at the end of this video up here or in the description also. So anyways, everybody enjoy your weekend. Definitely be careful for the Trump administration on Monday. Could be a lot of market volatility. And as always, thank you and happy trading to everyone.